I'm Ray, and I'm currently actually based in Hong Kong. And we are LUTECH, and we are a digital mining company, and we have been helping um, to build data centers around the world, mainly for blockchain applications. And today we are going to talk about Bitcoin and energy. So Bitcoin is highly related to energy, and I'm going to talk about why Bitcoin is an energy-backed currency. So our company has been previously featured in energy media, for example, Daily Oil Bulletin, JWN, which is energy intelligence related, and also mainstream media like Yahoo Finance, South China Morning Post, and also blockchain media like Bitcoin.com and Cointelegraph. So what is Bitcoin? Bitcoin is, as we know, it is a digital currency. It is digital gold. It is gold standard of the whole cryptocurrency market. And it is, all the transactions are recorded on a public ledger that's highly distributed. And all the transactions are processed by some guys called miners. And I'll talk further in that direction. And it is had a store of value. And current market cap is around $160 billion. And each Bitcoin is traded around 9,000 US dollars. It is highly liquidly traded nowadays on different exchanges, publicly and also privately. And around $10 billion of Bitcoin are traded every single day. For the past 11 years, Bitcoin transactions have been processed without failures. And currently, it is getting more regulated in different regulated exchanges in the US and around the world in the form of spot exchanges. That means Bitcoin are traded, and also derivatives, for example, like futures, are traded as well on those regulated exchanges. So Bitcoin has experienced tremendous growth for the past 11 years. Currently, the market cap is around $160 billion as we speak. And when we talk about gold, the market cap is around $8 trillion. So gold is 50 times more valuable than Bitcoin. And as I talk about, Bitcoin is like energy-backed currency. And I'll talk about more on the energy part of it in the future. So we see huge upside potential for Bitcoin. And when we talk about Bitcoin and gold, so for example, Federal Reserve Chairman said Bitcoin is a store of value, just like the gold was used. And it's also used as a medium of exchange, mainly for remittance purpose nowadays. And there's only 21 million Bitcoins in the world. And the smallest unit that's tradable is called a Satoshi, which is 1 billion of them. And the beauty of it is that every single Bitcoin transactions are recorded on the public ledgers with digital signatures, the transactions being verified by miners around the world. So let me talk about blockchain and mining.
Is a whole page of transactions in the old-fashioned ledger. A blockchain is just a chain of blocks. It's the same as a whole series of pages in the old-fashioned ledger. Easy, huh? Here's how it works. The Bitcoin blockchain actually exists in every one of the millions of computers on the network as exact copies of each other. However, for this example, so that we can zoom in and you can really see just how a blockchain works, I'm going to show it as one giant blockchain in the middle of a small network of computers. Let's follow a pizza transaction with Bitcoin. When the transaction occurs, it first appears on the network in a pool of unconfirmed transactions, along with thousands of others from all around the world. Millions of different computers from the network then gather some of these transactions and place them in their own blocks. The computers are all creating blocks constantly in the hope that theirs will be the next one added to the official chain. A new block is added to the chain every 10 minutes or so, when one of the computers wins the right to have its block recognized as the next in the chain and is rewarded with a prize of newly created Bitcoins. The way a computer wins the prize is by trying to guess the answer to an extremely difficult math problem. In fact, the problem is so difficult that even with millions of computers making guesses billions or even trillions of times per second, it still takes roughly 10 minutes to find the answer. Once one of the computers guesses the correct answer and wins, all of the millions of computers on the network that did not win are instructed to throw away all the work they have done, update their ledgers with the block from the winning computer, and start again with a new math problem. In doing so, the computers use an immense amount of power and cost a literal fortune to run. So why do they do it? Because it can be very profitable. This is where the term mining for bitcoins comes from.
So now we have a bit more understanding of what Bitcoin mining is. So essentially, Bitcoin are produced through this mining process where the miners process the Bitcoin transactions with tremendous amount of electricity for the processing power that it generates. And so the world is in search of the low-cost energy around the world. And I'll talk about like different energy that they use. And also, it's a highly profitable process. That's why there are more and more people doing it. Initially, like it's only like mainly done in China, but nowadays it's growing, spreading around the world, and it's like it's growing. The mining network is growing tremendously, and it needs to be handled with care. Let me compare Bitcoin mining and gold mining. And as I talk about, the main use case of Bitcoin is for remittance purpose and also store value. And as more and more market participants want to participate in the world, the Bitcoin network is getting more and more secure. And but it's still a highly profitable process. The payback period is about 1 year versus gold mining is like 6 to 8 years. And actually the CEO of Fidelity has been doing a mining operation herself as well. As we see, Switzerland is currently the 20th largest economy in the world. And Bitcoin actually consumes, the Bitcoin mining network actually consumes more energy than Switzerland right now. And it will continue to grow through time as more and more energy is used for this process. It's getting, the network is getting more and more secure. But the beauty of it is that 70% of the Bitcoin mining is done actually by renewable energy. So it's not, so that's why it's mostly clean. And actually 50% of the processing power is done in a province called Sichuan in China, where hydroelectricity is highly used. So a few common energy that's used is hydro is the main one, because the marginal cost of producing hydroelectricity is low. And now people are exploring wind and also solar as kind of energy modulation. For example, in this, there are peak load and off-peak load for these kind of energy generations, and any excess energy can be used for this Bitcoin mining process. As the 80% of the operating cost of Bitcoin mining is electricity. And basically that means they do mining for free. So it even increases the profitability of it. And these additional energy, if you don't use it, you lose it. So they all add up to secure the network. And these additional energies now come from different places around the world. But we see that North America is actually driving a lot of the new additional processing power for the Bitcoin mining network. So we do have an energy problem nowadays. When we look about how low the energy prices are, it could go negative. We definitely have underutilized renewable energies. As I talk about some hydroelectricity, if you don't use the hydroelectricity, you waste it. And energy storage is also not super energy efficient right now. And also methane reduction is an environmental issue that we definitely target around the world. It comes from the associated gas from oil drilling. And we have also explored using stranded gas around the world where there's no pipeline access. That's why there's very suppressed energy prices for that. And with shale and shale gas fracking activities, oil prices have stayed low. Although like at low energy prices, fracking may not be super profitable right now, but it would definitely return when prices rebound. So a solution for these guys is to sell the electricity digitally. As we talk about data centers, it's a big opportunity. Just for Bitcoin mining, it's projected 40 billion by 2025, which grows 30% each year. We talk about the energy network, energy that's not really energy used, because the energy efficiency of those data centers that are produced are getting more and more efficient. But more and more resources are put in the industry to safeguard the network. And there are also other data centers that we currently help to build. It's the green data centers and also edge computing data centers. And they can be also used for cloud computing. For edge computing, we're talking about local application process. And the whole thing adds up to $200 billion opportunities. And as we know, though, we hear a lot of buzzwords of like 5G, IoT, and cloud, etc. They generate so much data. So we definitely need data centers to store them and also process the transaction, process the data. So for one case, we talk about using local energy that for this Bitcoin mining process. For one of our clients in North America, right, in Canada, just for the extraction cost and processing cost is already 80 cents. And for the natural gas that is traded called ACO in North America, in Canada, and which is called Henry Hub in the USA. Actually, they can be, including transportation, they could be doing it at a loss. So if they use some excess energy for Bitcoin mining, we talk about per unit of energy, we do have a huge boost in the profitability, more than 10 times. So we look at the energy price. We see that basically it's unprofitable if they keep on doing that, pumping gas out of the ground. So we need to find a better way to support the local economy, and not just like by selling gas in the market where no pipeline has been built and there's minimum local consumption. So how the process is that it feeds, you filter the gas, and then we help them generate electricity. And it goes through the servers that does high performance computing. And the high performance computing will contribute to the processing power for the Bitcoin network and for processing Bitcoin transactions. And the miners will get paid in return in either Bitcoin or US dollars. That's deposited safely in their account. So this is our units that are made in the USA. So it's a beauty of it is a plug and play solution with remote monitoring service with minimum maintenance and labor required. And the beauty is that we can also provide financing along with it. And it's very interesting. It's more like plug and play solution. We can work in a day after we deliver it. And we can also minimize the volatility of Bitcoin, actually, if they prefer US dollar exposure. And as we look at the energy prices, it goes everywhere. And the beauty of Bitcoin mining is that the profitability is independent of the energy prices, mostly. So it's a very good balance for the energy producers and energy funds. So now I want to switch gear to talk about the environmental side of it. which is about methane reduction. As I thought, methane is an associated gas from oil drilling. So it does come, so it's inevitable that we produce those. And nowadays, there are environmental regulations that limit the potential for flaring. Um, so if we capture those natural gas, we convert them, we utilize the energy and convert them to carbon dioxide. Actually, it methane warms the planet by 84 times more than carbon dioxide. So we definitely are helping the environment on that. And at some places that if you, for treating those, if they limit the flaring, they have to treat those gas, and it actually takes money to do it. So it's actually the input cost for those guys will be free for energy for processing the Bitcoin transactions. And this is a unit where we process actually the natural gas and then feed into the yellow object, which is the generator in the middle, and then process into the right-hand side chamber, which is the data centers for digital mining. So it is a very beautiful solution, plug and play for our clients. So we do have partnerships around the world for those. We have our OEM supplier in the USA. We do have a relationship with chip suppliers and other manufacturers. And we also have can source one of the lowest, I think, electricity costs around the world. So to make sure that we are competitive in this digital mining market. So this is our team coming from different blue chip companies, Morgan Stanley, Credit Suisse, and also with great education background, etc. And we've been talking about, I think, this technology around the world, and it's very interesting to talk more about the Bitcoin network and also the Bitcoin mining as a whole. So, to summarize it, is that we provide institutional grade energy efficient data centers technology around the world. So it's not just limited to Bitcoin mining, but also for other purposes as well, as our technology is basically 20 to 30 times more energy efficient than other solutions, because we utilize something called immersive cooling technology that's developed by 3M. And it is highly profitable. We have done this projection of IRR projection, basically, when Bitcoin price was like around $7,000. Now it's around $9,000. So the payback period is nowadays around a year or even less. We do have, our team has been doing this, which is digital mining as a service, for over 5 years. And Bitcoin network has only existed for 11 years. So we definitely have a lot of experience versus other people to do it. And we can also provide derivatives for our clients for hedging purpose, and also yield enhancement provided. For example, we can provide we can source some products called costless collars, which can range bound I think the Bitcoin price for our clients when they mine the coins, so they can feel safe about it. And as I talked about, we also have a financing scheme for our North American operating companies, subject to credit approval, of course. So that makes the whole, I think, energy infrastructure play very interesting. And now I'm happy to open for any questions. But this is my contact email, and feel free to shoot me an email if you have any questions. Thank you.
Cool, awesome. So Ray, so I'm just wondering, like, so halving's actually coming up in what, 11 days. So how is it going to be affecting like some of the miners out there? And are they going to be phasing out a lot of the old machineries? And how's that going to affect the prices as well? So what do you think about that?
So let me explain a little bit about halving. Halving is it's part of what I talk about I think the inflation process of I think the Bitcoin. So nowadays the inflation is around is slightly less than 4% a year, but now it's going to be reduced by half of it. I think it's around to reduce to 1.8%. And the beauty of it is the supply of Bitcoin will getting less and less. So when we know about when the supply becomes less, the price would increase. So what happened was that for the previous two halvings was that Bitcoin prices went up. So as a result, the profitability of the miners did increase actually after the halving. So what I expect to see for halving is that basically for some data centers, it becomes less profitable because they use an older generation technology. And there's definitely a requirement for tech upgrade every 3 or 4 years. But nowadays, like even the Bitcoin miners that were developed basically 4 to 5 years ago are still profitable right now. So it's actually a pretty interesting process that we do monitor closely. Yeah. Thanks for that question.
I guess if nobody's asking, I could ask another one. So, sure, yeah. So Bitcoin obviously is the first, cryptocurrency that has been widely adopted. But Ethereum and the other alternative coins has come into place. But how come people are not really that interested into mining them in a large scale in comparison to Bitcoin, especially when it's actually a lot slower to do transactions with Bitcoin currently? So why are they still so hopeful with the Bitcoin technology and the currency in itself?
Yes. So Bitcoin has proven itself as a secured network for the past 11 years since its existence. And it's actually the first successful blockchain application. And there are a lot of different cryptocurrencies, for example, Ethereum, that can be mined. But I think the mining profitability actually is pretty scattered, and it's not that profitable right now. And Bitcoin has been proven that in terms of profitability and also scalability. And especially when Bitcoin, the trading volume and also the market cap is definitely over, I think market cap itself is over 70% of the whole cryptocurrency market. And also in terms of trading volume, it's like over that. It's over 80% for the trading volume. So it's a very trusted and proven, I think, both in terms of business model and also the technology for that. And currently, in terms of maybe application development on the Bitcoin side, people are trying to make Bitcoin more can be used for transactions. For example, a technology called Lightning Network is built on Bitcoin network that helps us to process the transaction faster. As you talk about, like in the video, that each Bitcoin transaction can take around 10 minutes. So going forward, we can see it more like other transaction network like Visa and Master, that you have faster transaction because the technology can process transaction first and then settle on the Bitcoin network. Thanks for the question.
So I guess nobody is asking another question again. Um, so what do you think about when Bitcoin actually or cryptocurrency becomes widely acceptable as a legal tender worldwide, and institutions are going to be flocking to or mine together in a institutional scale? Because I think a lot of these mining funds or mining institutions, they are relatively smaller. But let's say, for example, if Morgan Stanley or one of those large firms out there, large fund firms, all get together and do the mining, what is going to be happening with the mining industry? And is it going to be too hard for a regular guy like me and you to mine then, or we have to go for those guys? What do you think?
So definitely that's a trend for Bitcoin mining to get to be more and more professional. Initially, for the development that we use something called GPU, that we use the basically graphics card at home for the gamers, basically to mine the Bitcoins. It's actually pretty profitable. They could mine a few Bitcoins a day, and then they do it out of their dorm room where electricity is free. And it's getting more and more professional that nowadays, like, large data centers are being built around the world. But the beauty of it is basically you get paid for the proportion of I think the processing power that you contribute in. That's interesting. But we definitely see a trend that I think bigger players and also more professional players are getting into the market. For example, I think Peter Thiel's invested in Bitcoin basically in a Bitcoin mining company. And also, like, we are also talking with people about projects of the size of $100 million right now for that. But individual miners still have their position in the market. For example, if you contribute, like, I think around $1,000 in the Bitcoin mining network, according to the current market conditions, I think you do get paid back around a year or even faster than that. So, so I think the bigger players and smaller players do have their place in the market.
That's cool. That's awesome.
Yeah, thanks. Yeah. So I think there's 2 minutes left, and feel free to ask me any question as I'm sharing my email on the page. Thanks everybody for calling in. Have a nice day.